Welcome back, listeners. You're listening to the Haven Financial Group radio show, and I'm Larry Kalvig, founder and CEO of the Haven Financial Group. On with Kyle Thomas, certified financial planner, and investment advisor on the Haven Financial team. Kim talking every week. This week, tariffs, the worries, the concerns, and folks can give us a call at 612-504-8400 or visit us online, havenfinancialgroup.com. Or you can send me an email, larry@havenfinancialgroup.com. I'll respond, and we can talk more about anything we may have covered today. So just wanted to throw that out there.
Fantastic. Kyle Thomas is with us. He's a certified financial planner there on the investment team at Haven Financial. We want to talk a little bit about uncertainty that has created some volatility in folks' retirement plans. You spend a lot of time and effort to save all of your money for retirement. You maybe have put it in some spots that you believe have been safe or have been great returns for you. And then all of a sudden, all this inflation starts and you realize that doing it yourself is maybe not the best way to go about it because you need some advice. And the Haven Financial team can certainly be those advisors for you. So, Kyle, somebody comes in and they say, listen, here's where I have all my money. This is what I've done. I need to protect this money. What are we going to do? Let's talk through some of the steps that you talk to potential clients about.
Yeah, first off, we want to make sure that we have a good diversified portfolio. We want to make sure that we have a good ratio of stocks and bonds. And then we want to make sure that within those stocks, we have all these different asset classes that provide different types of return and stability. And we want to make sure that we have all these different types of bonds inside of the bond piece that, some of it's inflation protection, some of it's short-term bonds, some of it's a fixed annuity. It all depends on what the overall risk profile is, but we want to make sure that that is the first piece that we have because that allows for us to handle any volatility that comes within the investments.
Okay. All right. Great. Then what's next? What do we do? Again, we're trying to protect against all this volatility.
Yeah, absolutely. So then the biggest thing after that would just be making sure that we have a cash flow plan and that we have something that's set forth that can be that's longevity tested and it's stress tested to make sure that the plan works. And so when volatile times come, like the stock market has shown recently here, we want to make sure that we have a plan that we're not affected by any of that volatility. We come up with something that, regardless of what's going on out there, our cash flow needs, or what we get in our cash flow doesn't change because the stocks are down. That's the optimal plan and perfect type of plan because your lifestyle doesn't change based on what's going on outside. And then also, we need to make sure that people are being rebalanced inside of their portfolios correctly during times like this. Because when I see volatility, I actually get a little excited. I see that because it gives you an opportunity to buy low and sell high. So when we're doing that, we've been buying stocks the last couple of weeks when a lot of investors who are scared of the market have been selling. Well, we've been buying and replenishing the stocks that we lost in value. And then we'll do the vice versa when the stock market comes back, because the stock market has always come back. It's just a matter of when that happens, but we just need to be patient. And if we have that plan, like we were talking about earlier, we can wait for it to come back. We have that plan set for us to be patient and disciplined investors.
And if maybe that plan isn't as solid as it needed to be, I would imagine that you also can step through and walk people through a better budget, maybe, cutting back in some places, right?
Yeah, and then there sometimes, we do have to have conversations like that of where we adjust the budgeting and say, all right, well, instead of spending a few thousand a month, maybe it's 500 less or for a short time or something like that, right? We come up with some kind of plan that works for them and to create healthier habits so we can have the retirement that they desire. And there are a bunch of different things that we can do, with the types of investments as well, and where funds are invested, increasing the risk profile or getting higher income streams.
Sure.
So there's different types of investments that can achieve those different types of goals. But sometimes, we do have to adjust the budgets as well.
Kyle, I would imagine, and we talked about this off the top of the show, but you've had some folks who have come in and said, Kyle, sell everything, sell everything. We got to get, that emotional, sort of panic, if you will, panic selling because they don't like the way things look.
And that's something that you really want to be careful of because, studies, there's been so many studies on this, and they show that investors who are panic selling during downturns, they miss the best recovery days because those recovery days actually come pretty close to when those downturn days are. And if you miss just the 10 best days in the market over a 20-year span, that actually cuts your return at about half if we're looking at historical return numbers. But then also just think about in March of 2020 when COVID happened.
Right.
Well, if you went to cash in March, you missed April, May, June, July, August, September, all of that. The market just rallied and it ended up being a positive year that year. So if you missed out on that, you went to cash. Well, you also got to decide when to get back in. How do you make that decision? Right. What are you basing that on? So we have to make sure that we're disciplined and that we don't make emotional decisions like that because those recovery days, they do tend to happen pretty close to those downturn days.
I think it's really important to stress that people who feel those emotions and who react that way, I mean, that's not anything to be embarrassed about or to feel that you don't want to express that to anyone, because I think that's just your natural reaction because we're on a shorter leash when we're in retirement.
Yeah, Cam, if I could interject here, you're right. The element of time becomes that much more important as we get closer to retirement or in retirement. What does that timeline look like? That's going to be a conversation we have. And, if I could just summarize, for the listeners that are listening, if you come to our classes or maybe you were referred by a Haven client, which we have lots of folks that are, we take people through the same process. We bring them in and come on in and visit us. It's a very laid back approach. We'll have a first meeting where you get to know us, we get to know you, ask a lot of questions, a lot of inputs, a lot of information. We listen, we take a lot of notes, and that's where it starts. And from there, okay, now what are you doing? What do you like about what you're doing? Is there anybody helping? That could lead, if you think we're a right fit, and wow, these Haven folks are kind of cool people. Maybe they are. You can come back and then we'll dig deeper. We'll stress test your portfolio. We'll look at your overall investment, your strategy, and what you're doing. And hey, it's not our job to criticize or do anything, but is there any improvements that we could be making or recommendations? So we'll come up with some recommendations. Maybe there's some asset classes that you're just not touching. Maybe you have way too much risk. Maybe you're paying way too much, and make you aware of these things. From then, if you think that, I need to make some changes. Then we'll put together some and start making the changes. And we call that the implementation process. And when we'll dig so deep as to, in the projections, look at your budget, look at your investments, what type of tax classification are those investments. We're going to look at your real estate, all of the above, and project that out 30, 35 years. We're going to dig as deep as tax planning. Here's what in 5 years, Roth conversions may make sense. And from then, we just continue to modify that plan and look, here's what we need to be doing. Now it's 10 years from when we started this plan, whatever that is, to avoid this. I remember in 2008 when the market crashed, exactly who I was with. And they couldn't even talk about investments. We had to stop our conversation. And that is some people this last couple of weeks with the markets just going so crazy. In that 2008, I remember the Star Tribune on the front page said, 3 out of 5 seniors have to go back to work or stay in the workforce longer. In 2008, and in those market correction years, people were retiring.
Yes.
Or they wanted to retire. And that does not change. There's people going to retire right now. So avoiding to be one of those 3 out of 5 that has to stay working because you didn't have a plan or you took too much risk and you didn't even know about it, that's the attention you deserve, so you can avoid things like that. I hope 2008 or none of that ever happens to anybody again, but it's going to.
Yeah.
And that's unfortunate, but you owe it to yourself to at least get a second opinion.
If some of this rings true for you and you would like to sit down, get a second opinion, or maybe you just need a plan, 612-504-8400 is the number you call. The folks at Haven Financial Group would love to sit down with you, talk through, as Larry just described, what it is that you're anticipating in your retirement, and take a look at whether you have a portfolio already that needs to be reviewed or you need to put one together. It's 612-504-8400. Coming up next, we're going to talk about annuities. This is the Haven Financial Group Radio Show.